How's it going, everybody? It's Stas here. So the stock market had yet again another phenomenal day. S&P 500 up $21, up about 0.6%. Dow Jones up $185, up 0.7%. And the Nasdaq crushed it yet again, up $141. All-time high was hit, up 1.3%, as all of the big tech names out there, we'll go over some of these in a little bit, they all did very well. And in this video, we're going to be talking more about the stock market, breaking down some technicals, and I also want to talk to you guys about and break down a bunch of beaten down stocks. Despite the markets being up, there are some stocks recently that have gotten beaten down, so I want to go over those, some of which I'm looking to buy. One of them I'm actually already in, and I also want to break down with you guys what I've been doing as of late in the market, some earnings reports, as well as in general where my head is at right now in the stock market. So a lot to go over in this video. If you guys find value, join our Strive Smart Discord chat, hit that like button while you're at it, join our free Facebook group, and make sure to claim your 2 free stocks. Those are linked down below. Those are from Webull. All you have to do is deposit $100 using my link, and you get those 2 free stocks, and one of them is actually valued up to $1,400. So let's get right into the video here, guys. Markets closed about an hour and 15 minutes ago. Again, S&P 500 had a spectacular day, and I believe this was the 5th straight green day on the S&P. I was reading that earlier before filming this video. I'm not sure if all the indexes hit 5 straight green days, but for the S&P at least, it is the 5th straight green day, and I'm pretty sure it is for the rest of the indexes other than the Russell as well. But either way, very strong day, and today's price action shows us that A, the bulls won the day, very obvious, right? And B, we took out that 3330 level of resistance that we've been talking about on this channel here for quite some time, right? We talked about it yesterday, the day before, a couple weeks ago, and that's a pretty big level because it was an old all-time high back in the month of January. So 2020 kicked off, we rallied up to 3330. We got rejected there. We pulled back, making it a resistance, right? So the fact that we broke that level out of that level, that is a very positive sign for the bulls here that, yeah, we might be going to all-time highs here, which at this point, they're only about 44 points away, 44 points, which in this market, that could happen in 1 day, that could happen in 2 days, and heck, 3 days, it's very easily possible that we can gain 44 points. And like I said yesterday, I think earlier this week, I think the S&P is hitting all-time highs within, I said either this week, which it might tomorrow, let's see if we have a ridiculous day, or probably next week, right? And we'll see what ends up happening next week. It'll most likely hit all-time highs next week. And I could be wrong. Let me know what you guys think down below in the comments. But based on today's price action, we broke 33.30. Bulls are in charge. It seems like they're getting a full head of steam, right? And a point where, we might pull down, a point to watch out for that we could hold as support is going to be around this 50 SMA. I know we're about 100 points off of this 50 SMA here on the 4-hour chart, but let's say we do hit an all-time high, and we start to see some sort of a cool-off on the S&P. I think it could pull down to 3330, maybe 3300, maybe 3350. We just have to see and wait and see what happens over these next couple of days. Then we'll analyze it a bit further. And I almost had a little lisp moment there. But that's what happened with the S&P there. And we got some jobless claims numbers today, which probably pumped the market up. We got a new low number of 1.19 million, and it's still above 1 million for the 20th consecutive week, but we got another deaccelerating week, which is good, right? The past 2 weeks we've talked about, the numbers were actually reaccelerating, right? Back-to-back weeks of increasing numbers, but the fact this week we dumped off again, 1.19 million. Last week we had 1.4 million. This is pretty good news. So that was good for the markets, I'd say. The markets took it well, and we got some numbers Wednesday. I figure, I'll mention them again. I mentioned them in yesterday's video. We got 167 private employers added 167,000 jobs in July. That is well below the forecast of around 1.2 million. And in June, about 4.31 million jobs were added, and the Labor Department's official July jobs report is set to release Friday morning, which should also have an impact here on the market. We'll see what ends up happening in terms of those numbers. We'll get some more specifics there and so forth. And when it comes down to the Dow Jones here, up 185 bucks, we took out 27K. Very, very big resistance break there. This is a point that was a resistance back in the beginning of March, back in, the beginning of July, heading to the end of July. So the fact that we took 27 out, now we're headed up to the point that we were at back in the beginning of June at around 27,600. And if that breaks, guys, we're finally going to get some head of steam, a full head of steam here, in my opinion, in the Dow, to the point where we might be going to test resistance levels from back in November at around 28,200. That is also where we held back in the end of June as a support before hitting almost 30,000 bucks of an all-time high here. So 28.2. I mean, if 27.6 breaks, watch out for 28.2. That 600-point move should be easily attainable here in the Dow Jones, especially because, like I've been mentioning, the Dow hasn't gone anywhere since June, as opposed to the S&P, which is almost at all-time highs. It's made some good moves since June. And, of course, the NASDAQ, guys, is at all-time highs. It's been crushing it since June and ever since the $6,700 low here back in March, right? So at this point, markets are crushing it. NASDAQ all-time high, $11,282. And we called this out, right? We called this out as a very bullish move ever since 11,000 broke, and we held it for Monday, Tuesday of this week. We called that as very bullish, and we got the big gap up this morning, and the horses were let loose. Let's put it that way. This thing ran up 1.3%, and it's probably because of the Facebook. Facebook had a big move today. We got some news about their unveiling their app that's going to be a competitor to TikTok. It's called Reely, Reely. Am I making that up? Let me double check. I think it's called Real. No, it's Reels, not really. Reels, Reels. So I'm going to have to download that and check it out. I don't like TikTok, to be honest. I think I'm not in the demographic. I'm 24 years old. I'm mid-20s. So I'm not really the demographic, I'd say. But hey, I'll check it out because Facebook is one of my investments. I have to keep up with it, right? That's the whole part of being an investor, a shareholder, keep up with the business. So I'm going to have to download that and see. But overall, that is what Facebook did today. Very well, up 7% almost. And that's kind of what ended up pushing up the NASDAQ. Of course, a lot of other tech stocks. Apple was up 15 bucks today, up almost 4%. Amazon up 20 bucks, 0.6%. Netflix up 7 bucks, about 1.4%. Google finally did well today, up almost 2%, and Microsoft up 3 bucks, up 1.6%. So overall, that is what happened in the markets today. Tech crushed it. Dow did well. S&P did well. The Russell was red. Small caps struggled a bit today. Probably anxious in terms of the stimulus, kind of waiting to see what happens there. That will also affect the market. So a lot of moving parts right now. Overall, watch out for those jobs numbers tomorrow. That's going to be pretty interesting stuff. And let me know down below in the comments, what are your thoughts on the markets, everything going on right now, where we're headed in the future, individual stocks you're trading. And in terms of my trading, I added one position today. I added FSLY, also known as Fastly. And this is a company that we talked about yesterday briefly. They reported numbers. They actually beat on EPS and revenue, and they actually guided up. And the stock went down about 17% today. So I figured, this stock has held the 180 SMA 4-hour chart here every time it's pulled down. It seems like last time We pulled down from about 103 down to about the $80 range. We held the 180 SMA. Now we're holding about 88, 90 bucks. And I actually added a little bit here, very small position, guys, quite honestly, because I want to scale into this. But I added a little bit at literally $90, and I think it was 99 cents, on the dot there. Sometimes I set my limit orders. It's funny, guys. I don't know if you guys do this, but sometimes I set my limit orders not at an exact number like 91, but I'd set it at 90.99 or something, or 89.99 or 89.97. I'm just weird like that. I set limit orders like that. And yeah, I ended up getting filled. It was earlier in the day that I actually bought this on this rally up here. I bought a bit late, quite honestly, but it's okay because, like I said, I'm in with a little bit of a position here, nothing crazy. I'm not risking my entire account, and that's the beauty of swing trading, right? You can scale into your positions, and if the stock goes against you, and you're scaling in, what you can do is cut losses and you won't lose as much money as, let's say, you went all in with your account. So that's kind of where I'm at right now. I'm in at about 91 bucks here on Fastly, and I plan on adding more, right, as it continues to rally up. If it does, right, if it holds 90, which is kind of the basis of my trade, right, if it holds 90, rallies up to the mid-90s, hundreds, that's where I'm looking to cash out some profits. And hey, if it takes 90 out, I might reevaluate it and maybe add a little bit more at about 80, 85. We'll see what ends up happening. That's what having cash allows you to do, right? It gives you the option of adding more, or you can just cut your losses and take that little loss on the position that you have. Well, let's say it's like 10, 20% of the goal position. So that's kind of what I'm looking at right now when it comes to Fastly here, FSLY. I'm also in Netflix. Like we said, big tech crushed it today. Netflix did well, up about $7, up 1.4%. I didn't lock profits in Netflix. I'm still holding on to it. I think there's a lot more potential. And in general, I'm in around the high 490s, 496, 497. That's where I'm holding my Netflix shares at this point. And I'm long, guys. I'm long. I've been on record saying I think Netflix is going to come back. Quite frankly, out of all of the tech stocks, I think Netflix and Google, and you guys could easily agree with that by simply looking at the charts. I mean, these two are the most beaten down. Netflix, take a look. It has a ways to go up to all-time highs. Google has a ways to go. Well, not really. I mean, it does, about 86 points, but Netflix, on the flip side, has more to go in terms of a percentage value. And, the other ones, Microsoft, it's at all-time highs. Not much potential there, right? Apple at all-time highs. Not too much potential there in my eyes. And Facebook today, we just hit all-time highs at 2,666. And is the Illuminati watching my video, guys? Facebook's at 2,666 all-time high, and I'm watching this. Holy crap. I'm just kidding, guys. But yeah, Facebook, it's crazy. It's absolutely crazy what's going on right now in these tech stocks. Are they in a bubble? Let me know your thoughts down below. I don't know. I did live through the tech bubble, but I was a youngster, so I don't know if I can compare this to that. If you guys were living, let me know down below. I'd love to know what you think. But yeah, is this comparable? Is this the tech bubble? Is this not even close to what the tech bubble was? Are we not even considered a bubble at this point? I'd love to know your thoughts. And I'm also in Workhorse, kind of bummed out about this one. I might actually just get out of this. Maybe not. I mean, if it breaks 1640 and starts to head down to about 1415, I might just cut out of it and put my money elsewhere. But the fact that I'm holding it, I'm holding it at this point because we are holding about 1640 heading into the close today, so there is some hope. And honestly, if we rally back out and we get anywhere close to 18, I might lock in profits on this one. And the reason is because I've been in this trade for a bit longer than I've wanted to be. And I should have sold out the other day, got greedy, guys. And that's the thing about this channel, right? I share everything. I'm transparent. I should have sold profits there. there. I said that in that video. And here we go, sitting, here 3 days later, and I'm back in my cost basis. That's the reality sometimes. If you don't pull the trigger and sell, the stock could come right back down to your cost basis, and that's kind of where I am at right now when it comes to Workhorse. And overall, that is it for the market update. So let me know, what are your thoughts down below. Now let's go over some earnings. Uber just reported, and they didn't do so well. Uber ended up reporting a $1.02 loss versus the 86-cent loss, so they missed there on EPS, and revenue came in at $2.24 billion versus $2.18 billion. That missed, or actually no, that was a slight beat, and bookings were actually down 35% year over year, and that was down at $10.2 billion. And in terms of bookings, I'm assuming that is rides. I'm assuming that's rides. We'll go with that. I'm not too familiar with the terminology that Uber uses for its earnings, for its business, and so forth. I don't own any Uber, but that's probably, rides booked, and that's down again 35%. Correct me in the comment section if I'm wrong, but that's not too good when it comes to Uber. And quite honestly, I'm not interested in trading Uber, buying it. Maybe a short-term trade if it cracks out of $34, $35. That's a pretty big resistance here. I mean, we were up today about 5%. It seems like the markets were anticipating a better earnings, but here after hours, we're down about $1 from the high. So we pretty much gave back all of the gains from today's session. But either way, despite the bad earnings, again, I'm not looking at it as a long-term investment here, but we might be able to pick up a trade if it does end up taking 35 out, which has been it's been a struggle point for a while. This whole year of 2020, pretty much from January to the end of February into the beginning of March, we struggled at 34, 35. In May, literally this whole past 2 months we've been struggling, so I'm thinking it could get a momentum move from $35 up to around, let's say, 38, 39. That's possible in my opinion. And pizza, PZZA, this is one that I was a bit more excited for. They had a pretty good earnings report. Papa John's EPS came in at 48 cents versus 45, so they beat there slightly. Revenue didn't beat, but still $460 million versus $468 million. But what I like here, and we'll take a look at some more metrics in the live news tab here on ThinkOrSwim, what I like is Q2 system-wide North America comparable sales were actually up 28% year over year. And if we zoom in a bit here, you can see Papa John's sees July international comparable sales up 13.9%. North America sales for July are up 30.3%. We're getting some growth here in terms of the business despite this crisis we're in. And quite honestly, it's arguable that the crisis ended up helping out fast food pizza chains such as Papa John's and Domino's, which really are mostly delivery based, right? You don't go there and eat. You pretty much get the pizza delivered to you. So these arguably did better during this crisis, and the numbers are coming out showing that they did pretty well. So, better than expected results here for Papa John's. Stocks trading down a bit. It's at about 97.50 here. All-time high was hit at about 103 earlier today pre-market. So I'm looking at this one tomorrow, guys, very closely as a dip buy off this 50 SMA, anywhere from $95 to about $97. That is Papa John's, ticker symbol PZZA. And when it comes to earnings, that's all we're going to talk about today. We went over a bunch yesterday, and earnings season is slowly coming to a wrap here, guys. Maybe we'll do a video going over in general how the whole earnings season was, compared to last year, compared to previous years of growth. That might be interesting to see how companies are doing in this environment despite the stock prices going up, because you guys have to realize what companies actually report in earnings, their revenue, their earnings per share, what they report there, it doesn't have to do with the price. The price can go up and down, and the business could be doing bad or good, right? The price doesn't necessarily reflect what the business itself has been producing. And when you take a look at what the business has been producing, revenue, EPS, that's where you get and see and understand how they've done year over year. Are they growing? Are they falling? Are they struggling, right? Sometimes the stock price doesn't always reflect that, and that's when you can actually get into opportunities, right? Because if you see a business that, let's say, it's doing very well, but the stock price is down, that could be a time to buy in, right? And vice versa. Let's say a business is doing very poorly, the stock price is somehow still decently high, that's a time to maybe get out. So that's kind of how I'm looking at things, and how I view them sometimes. And when it comes down here to a bunch of other stocks, some of these are very beaten down. We have Upwork, ticker symbol UPWK. They reported earnings a couple days ago. I believe they did decent. Let me pull up the live news tab and double check, because I am forgetting here off the top of my head what they did end up reporting. Here, they actually beat. EPS came in at a loss of 3 cents versus a loss of 9 cents. Revenue came in at 87.5 million versus 80.3 million. So they beat on EPS. Excuse me, guys. They beat on revenue, and they got some price hikes here from different analysts, whatever. And the stock's down from about $19 down to about $14. So that, in my eyes, is a drop of 25% roughly. That is a beaten down stock, right? And they reported a pretty solid earnings report. We're approaching around $14, which has been a level of support over the past 2-3 months, and it's on the 180 SMA here, gold line, on the 4-hour chart. So this could very well be a point where we hold on Upwork, right? And I think I might be picking up some shares tomorrow. No joke. Heading into the weekend, this is one that I'm looking at very closely. So, and even today, down about 7.75%. I mean, this thing is getting beaten down. I'm not too sure exactly why, other than that. People maybe just thought that the earnings weren't good enough. People maybe hyped them up a bit too much. Now we're seeing a bit of a sell-off after, and, this could open up an opportunity. So we'll see. If it ends up holding $14 tomorrow, I will for sure be considering a position. Another one, we already talked about it, is Fastly, FSLY. This one's down about 20-25% from its highs as well. This one is very well worth watching here, in my personal opinion. And Roku, although it's not as beaten down as other stocks, it's still down about $24 from its high. That equates to around a 13% move. So I'm thinking Roku could be a dip buy here. We saw another 7% drop today. Actually, was that from their earnings yesterday? Yes, it was. They dropped after earnings. They were actually up to 178 after earnings, and they're down all the way to 150 now. So quite the fluctuation, very volatile here on Roku, but they did decent. I mean, EPS came in at 35 cents of a loss versus 51 cents loss estimated, and revenue beat. Revenue came in at $356 million versus $312 million, and I believe we got some data revolving their users. Their users are up about, I don't want to give the stat because I'm not remembering it off the top of my head, but it's a pretty nice growth year over year. Let's see if we can see it here in the live news tab. It was like 20%. No, it was 46%. That's what it was. The platform revenue increased 46%. Their users were up 20-30% too, whatever, I forget. But pretty solid growth there in terms of Roku, and the stock is a bit down, right? It's a bit down, 13%. It might be a bit of an overreaction here. So we could end up picking up a dip buy here, and heck, if it breaks 150, guys, we go to the low 140s. That might be even better, right? Off this 180 SMA support here, we can get a little dip buy anywhere from 140 to 150. So watch Roku. I'm watching that one with a laser, guys, very, very closely. And INTC, we haven't talked about Intel in a while here, ever since AMD went up that day. I mean, AMD went up 16% one day, and Intel went down 16% that same day. It's almost like they swapped. And for me, guys, I like looking at stocks when they're beaten down. I know a lot of people get very excited. A lot of the Robinhood traders are bidding up some stocks. They get very excited when a stock is running up to all-time highs, whatever. I trade some that are close to all-time highs on dips. I do that too. But when we're looking at bigger dips, right, massive drops, this is not even a dip. This is I don't know if I'd classify it as a crash, but it's a pretty big correction, right? The stock's down, like 20 to 25% from its $60 high. It's not even a high, but where it was before the drop. So it's down about 25%. And overall, I mean, yeah, their chips got pushed back to 2022. That's not too good. It seems like AMD is starting to get a leg ahead of Intel at this point, but you can't deny that it's holding $47. And as a technical guy, I like technical analysis and fundamental, right? I think both are very important. And as a technical guy, you can't deny the fact that we're holding the previous level that we held back in the end of the crash back in the middle of March, which from there we actually rallied back up from 43 to about $60. And we'll see, the market will end up telling us, right? We'll see what the market thinks in the next couple of weeks, because the market prices the stocks, right? And it's all with buyers and sellers, volume, and so forth. We'll see. Is the market going to hold 40, 45? Is it going to respect this support? Is it a bit of an overblown scenario here with Intel where it's slowly going to recover over time? I think, quite honestly, it's going to slowly recover over time. I think it's a bit overblown. It is a big hit for the business short term, but long term, if you're looking long term here, I think we could see an opportunity. So watch for 45 to hold. I mean, it already is, but watch it for, for it to hold, for extended period of time, a week, 2 weeks, 3 weeks, a month. Watch for some consolidation. If it slowly starts to creep up to the 50s, 51 on Intel here, that is where I'd probably start initiating a swing position, and maybe, just maybe, if I do some more research on the company, maybe a long-term position as well. We'll see what ends up happening there. And another beatdown stock, they reported earnings a couple days ago. We talked about them, didn't do that well, is WYNN, W-Y-N-N. And the reason why I'm watching it here is because, A, it was up 7.5% today, indicating maybe the potential start of a rally up, a breakout, finally some green in the stock. But other than that, I mean, the stock's been holding $70 pretty well, $69, and it's kind of been boring ever since the end of June. And now we're starting to get, again, some spice in the stock, up almost 8% today. And I'm looking at it as, and I've been looking at it as a buy if it can get out of $80. I mean, 80, 82 has been a big resistance on the stock ever since the end of March, right? And with today's move, we could be testing that point next week. So at this point, I'm not buying WYNN quite yet, but I think it's worth watching, especially if we break $78, this 180 SMA, which we're coming up to at this point on the 4-hour chart. And if we break 82, I mean, this thing could fly, especially with good economic data, more push for a vaccine coming sooner, right? We'll see what ends up happening on that front. That would be very good news for WYNN Resorts. So that is WYNN. Another one here is Ulta. Ulta, guys, did pretty well today. It's over $200 again. Very similar scenario and technicals to WYNN Resorts. The stock hasn't done much since the end of June. It's been huddling between 190, 205, and now we're yet again testing 205, which we've broken out of 0 times, guys. 0 times in the past month. And could this be the time? Could this be the time Ulta breaks out above 205, 210? I think if it does, that is where we'll see a lot of Ulta potential. And quite honestly, this is a stock that I have in my long-term account. I've been buying a little bit recently. I like the value here as a longer-term investment, and I think there's potential from here, up to 230, 250. That's where I think it could realistically get to over the next 1 to 2 years here. So that is Ulta. SPCE is another one. I know Virgin Galactic, Stas, the stock's been crashing. Oh my God, what should I do with my shares? The truth is, guys, they had a share offering, about $400 million at about $19.50. That went into effect this morning. I believe we got that price. And it seems like we're holding $19 at this point. Not officially. We haven't gotten the confirmation that we're going to rally back up, but we are getting a little double bottom at $19. And at this point, I'm looking to see if we take out these resistances on this 5-day, 5-minute. If we do anything like this, a move up back to the 20s, 21, that's going to be very bullish, especially if we take 21 out with a huge move. That's going to get us back to the mid-20s in my opinion. But the truth is, we might not get there for a little bit. This stock could be cooling off. I mean, we had a very big rally up to $27. We're seeing a pull down to 19. I mean, we called this. We talked about it a couple days ago, right? If it does break 21, watch for $18.50 to $19 to hold. And that's exactly where we are right now, right around that 180 SMA here on the 4-hour chart. So, I mean, watch for it to cool off maybe a bit. Find support between $18 to $20 for a little bit. Maybe it bounces around there, and then it slowly gets out. Once you guys are in the markets a bit longer, I know many of you guys have been in for a long time. Many of you guys are beginners, but for the beginners out there, you think everything happens, maybe you have some misconception that everything moves every day. The moves are going to happen right then and there, but in reality, the market does its own thing. The market doesn't care about your trade, right? The market just does its own thing, and sometimes it takes a bit longer than expected. In my opinion here, we might be cooling off a bit, and it might take some time to rally back up. We'll see what ends up happening there. And that's pretty much it for the beaten down stocks. Google's another one. I wouldn't classify it as beaten down. A lot of these other ones are worse than Google, although Google is down about $100 off its highs, around 5%. 5% doesn't count as beaten down, but I'm still watching it here on this dip on the 180 SMA. Today was a good day, but I'd rather see it break 15.15 before initiating a position. We already talked about Facebook here. It's on my list at the end. But yeah, Facebook did well today because of Reels, its new TikTok competitor. We'll see what ends up happening there. And Tesla, guys. Tesla's been quiet, and when Tesla's quiet, you know what happens? We get one piece of news all of a sudden, and then the stock ends up rocketing. So I'm not saying we're going to get something anytime soon here. We'll see what ends up happening, but Tesla is worth watching at around $1,480 to $1,500. This has been a pretty decent level over the past couple of weeks where it's rallied out a couple times up to the $1,600, $1,700 level. So we'll see what ends up happening there with Tesla. And overall, guys, that is pretty much it for this video. I hope you all enjoyed it. If you found value in it, make sure to hit that like button for me. Consider subscribing to the channel. And don't forget to claim your 2 free stocks from Webull. Those are valued up to $1,400. All you have to do is use my link down below in the description box, deposit $100, and after a couple of business days, you get your 2 free stocks. I also get 2 free stocks since it is an affiliate link. And oh my goodness, I almost forgot. Square Stock. Go check out my video I uploaded earlier today if you're more interested, or if you want to learn more about Square Stock and their recent earnings report, their growth, whether or not I think it's too late to buy Square Stock, and whether or not it's a good value now. So go check out that video now after you get your 2 free stocks from Webull. Again, that's linked down below, and I'll catch you all in the next video. And oh, by the way, the video is also linked down below, and you should see it here in some cards. So yeah, hope you guys do well. Good luck in the market. Stay safe out there as always. Peace out, guys.